Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a pullback towards yesterday's VPOC of 35.5. In the overnight session, we had support at 34 quarter to 36 quarter, and that area ended up attracting responsive buyers and shutting off the downside. Also, as explained in yesterday's recap video, the main thing we were looking for today was follow through after the strong buying and the strong rejection from yesterday. So right now, we are seeing a bit of that play out. And heading into the open, we can see that the buy side is more dominant. So we're trading near the initial resistance zone for the day, 72 to 74, but there has been a very decent recovery here in the overnight session. And at this point, heading into the open, the buy side is in control. So off the open, we will be looking to be more active on the long side, but keeping the trade location in mind that if you're buying at a very high price and there's not momentum behind it, right? So at this point, you want to see strong underlying momentum. You want to see sustained positive tick readings in order for the market to go higher. And if you are initiating a long at any of these higher prices, it's a momentum-based trade. So if there's a lack of strength and a lack of momentum, then we need to be careful and wait for better trade location. So on the downside, we have support 56.5, 58.5, gap fill at 55, followed by support 50 to 52. 46 is an overnight high volume node. Initial support 40 quarter to 42 quarter. And all of those support areas have potential to attract responsive buyers. Now, ideally, you want to see the market holding above 50 to 52, above 56.5, 58.5. Holding above 56.5 to 58.5 would tell us that the breakout that we're seeing on the smaller time frame in the overnight session is actually sustaining, and it would just confirm that the buyers are still in short-term control. Whereas if you break 56.50 to 58.50, it doesn't mean that the sellers have to regain firm control, but it would tell you that short term you may want to wait for some better location before initiating another long. But right now, the way the market is set up, it is attempting to break out above yesterday's high, above the initial resistance zone, and it may take a little more consolidation for that to happen, but there is potential for a bigger underlying shift in the market bias, in the market trend right now after yesterday's strong rejection. So again, the main thing we're going to be looking for and the main question we're going to be answering this morning is whether there is follow through after yesterday's buying, even after the buying we've seen on the smaller time frames in the overnight session. And in order for that to happen, we are going to have to see continued broad market strength and sustained upside momentum. So if you're seeing, for example, tick holding below zero, that wouldn't be in alignment with that scenario, which means that we'll need to get better trade location on the long side. On the upside, beyond 72, 74, we have resistance at 80 quarter to 82 quarter, and that's an area where we could get a response from the sell side, but it's not really a strong area of resistance. On the upside, the next area that can produce a better reaction and a better response is up near 89.50 and really 93 to 95.5. That's the resistance zone where we could see a better reaction from the sell side in the event that we break out and continue going higher. 05.5 to 07.5 would mark a range extreme, so that's another area where we can get a reaction and the market can even top out. So 93 to 95.5 and 19.05.5 to 07.5 are pretty solid areas of resistance, and most likely we will not go beyond 05.5 to 07.5, but in the event of an extreme, 12 to 15 is another zone that can really cap the upside and shut off the buying. But the higher probability areas that can get tagged are the 80 quarter to 82 quarter and the 93 to 95.50. And again, those areas can attract sellers on first test, with 93 to 95.5 being the higher odds spot for sell side to be more aggressive and more active. So today again, heading into the open, the short-term bias, based on what we've seen yesterday in the overnight session, is neutral to bullish, and we are just going to be watching to see whether there is follow through on the buying that we saw yesterday and the buying that we've seen here in the overnight session. So our bias now heading into the open is not extremely bearish or simply because of the breakdown that we saw yesterday. It is more neutral. And again, the market may balance. It may need to consolidate a bit more before breaking out. But we are going to be looking for those signs to support that idea. And if we're not seeing it, then we'll just have to be more cautious with location and get a more conservative spot on any long setups. And then if we're seeing outright weakness, strong downside momentum, then we can consider the short side for a pullback into perhaps one of these support zones here. But right now the bias is more neutral to bullish, and like I said, this may mark a bigger shift in the underlying trend and bias. How the market reacts to 72, 74 is really going to be a tell. If we can break out above that area, it would be confirmation of buyers being very aggressive and dominant, and now the control shifting from the sell side to the buy side. So those are our main thoughts. Let's see if the buyers can continue to be active here, and we'll take it from there.